Hey everyone, welcome to my YouTube channel. This is Dave Gandarillis. This channel's focus is ways to generate streams of income online. I show you the ways I'm generating streams of income, and it's up to you to decide if that's something you're interested in. Certainly consider subscribing and clicking the little bell, liking and sharing this video so that we can grow the subscriber base. As I mentioned in my other videos, once we hit 2,000 subscribers, I'm going to do a crypto giveaway. So let's get this channel growing, and let's grow together, and let's learn together. So one thing I want to make sure you guys are aware of before I go any further, there is timestamps in the video description. So make sure you look in the video description so that in case you don't have time to watch the entire video, you could jump ahead and look at the specific topics of interest that you have. I try to do as much detail as I can here so that you can hop around. I also want to make sure that you're aware that this is not a signals channel. I am not providing signals for trades. I'm showing you my technical analysis approach and how I do my technical analysis, and in the hopes of you learning the skill set for yourself and replicating what I'm doing on your charts and following some other people that also do technical analysis. And by following multiple people, you'll start getting different perspectives and different ways of doing things, and you can kind of create your own plan, trading plan, risk management plan, all those things that you need. And besides all that, you need to know that it's a mindset. You gotta keep your mind straight. You gotta be positive. You gotta not get greedy. All those things are very important when you become a trader, so that you don't chase and get greedy and then over leverage your account and then end up losing everything. So be consistent, persistent, come up with a trading plan, practice the charts. I said it in my last video, you need like 10,000 hours of any kind of skill development to become good at that skill. So you got to put the time on the charts. And just a reminder that this is not a signals platform. So if you're coming here looking for enter here and exit here and do this and do that, that's not the essence of this channel. This is an educational channel. I'm trying to share my technical analysis skill set. I don't say in anywhere that I'm a guru and you should follow me and pay me money for my signals. None of that crap. I'm here to share what I know, and hopefully if you don't know as much as I know, then you learn something. And if you know more than I know and you want to be part of this community, please share your perspective in the comments. So the other thing is, I have topics here, and I'm getting more followers commenting for things. So today I'm going to do a video. Someone asked for Mana, Decentraland, and StormX. So I'm going to do charts on those two. But look here and see what I have listed here. And if there's something of interest to you that you want me to talk about, please comment in the video comment so that I know. Depending on what you're interested in, here's some other ways to generate opportunities and generate streams of income that I'm doing. And then also there's ways to contact me. And then, if you're watching this video, this is the first video you found, you might want to look in the video description towards the bottom. There's some other videos you might be interested in the same topic of this video. For example, this is all on technical analysis. So I listed some of the most recent technical analysis videos I've done so that you can just click here and watch it and not have to go search into my channel to find the applicable topic areas. So I kind of try to make it easy for you guys to kind of look at some other ones. And I try to keep these fresh, so as you go down this list, it's going to be newest to oldest. So if you want to backtrack, start from the newest to oldest, because as these get older, they don't have applicability on price action because price action has done something else already. But you could always go back in time and replicate what I did in practice. So again, just like I mentioned, a couple people commented some stuff. They asked for these two, so I'm going to do these two plus two more today for Raven the Mad Russian. Very nice name. Welcome to the channel, and I appreciate your comment. And please consider commenting, liking, sharing this video, subscribing, become a follower of this channel. And when we hit 2,000 subscribers, I'm going to make a video for the contest, for the giveaway, And if you have the, if you're subscribed and click the little bell, you'll get an email saying that there's a video out. So that's the best way for you to be able to participate in that giveaway. And more importantly, I want you to follow my channel because you want to. So hopefully it's going to be an easy decision for you to click the subscribe button, click the little bell, make some comments, and let's get into the topic. So I haven't looked at two of these in a while, so most likely we're just going to clean up the charts on UniSwap and Litecoin. But Storm and Decentraland is a very good crypto. I don't trade it from day to day, but I do have this in my portfolio, and it's done very well. As you can see here, it's gone from 7-8 cents all the way up to $1.13. So you think about that. That's good 15x since the bottom here. Now at a broad level, the daily chart, you could kind of see how we did a 1, 2, 3, 4, 5, then an A, B, C, and now we're into maybe a 1, 2, 1, 2, 1, 2, and now we're going to go into the 3, 4. So just to kind of show that at a high level, this is what I see as far as the way things played out with Elliot wave. All right, so that's the first wave. The wicks are okay, so really probably should keep this down here because the wick, you can overlap on wicks between 1 and 4, but the bodies can't overlap. And then after we finished that 5 wave, we went into a 3 wave correction, or ABC. Yeah, ABC. So did one of these. All right. So then any wave up usually has a corrective wave down, and that's basically, on the bigger scope of a Elliot wave, you now have this as a 1, and now this is the 2, and now we're trying to figure out where these are going to go. Now you could pretty much see, maybe we put in the 3 to the 4. Oh, actually no, this is at a broader wave, so we're not there yet. What we need to figure out is where we are in the next 5 wave here. So what we got to do is so to make this clear, so that you guys don't get too chaos here, let's move this down to a lower. Do like a minuet, and this one doesn't have to be a super cycle. This should be just a normal. Yeah. It's just hard to see because they're overlapping, but basically what I'm trying to say is this 0 to 1 is a bigger one, and within that 0 to 1 there's going to be 5 waves to that, and then from that, let's just do this. Let's just move this to the side here. Otherwise it's going to get complicated. All right, so we have a 1 to 5, we have a correction. Now we're going into another 5 wave, and this is where we are right now. And from there, you can see that this is a minor retracement. So if the first one's a minor, typically the next one is going to be a deeper retracement. So the next thing you could do to figure out where we want to go, for sure, this has to stay above 1. So we know that. We just got to figure out where we should put this. Now there's 2 ways to do that. This is on the log scale too. Let's see how crazy. Yeah, let's keep it on log for now. So 1-to-1 would mean that from here to here, you know, it has to be at least 1-to-1. And you can measure that. It looks awkward because of the log scale, but if you just take a drawing tool here with the trend line and you bring that up here, you know, this would be the 1-to-1. Let's just take it off log to keep it simple. So that would be 1-to-1. You know, the next leg has to be equal to or greater to the first. So if we want to really set this to exactly 1, has to be at least that. And then 4 could stay there. And then if you take this Fibonacci away and you kind of measure this next one right here, you'll see it's a deep retrace. See, it goes down to 618. So it's exactly the requirement of Elliot wave. So typically if the first one is shallow, the second one is deeper. If the first one is deeper, the second one is shallow. So let's just keep it like this for now, because we don't know what price action is going to do, and at a minimum it has to do this. It could go further. It could go to here, you know, but at a minimum price action has to come to here. So we're here. And we look like, you know, it looks like it has to go to 1816. Let me turn off this audio so you don't get beeps all the time here. So right now the retracement happened. It's already pushing higher. It's up to you if you want to decide. If anything, I would wait for the breakout above the previous peak here before you get into a trade. You know, make sure it checks the resistance level once it breaks through here, because otherwise what your trade should have been was to retrace down to here. You know, you should have been getting in down here. So it's a little late to the game. So instead of chancing that you're going to chase something bad, what I would do is what I just mentioned. You know, just pick off this peak. So once price action breaks above that, what you'll do is you'll wait for it to break above. Take this off. Wait for it to break above, and then come back and check to see if that's going to hold as a support. And when it starts coming back up, this is where you could enter a trade in this current situation, because you missed the retrace. Otherwise, what you're going to do is you're going to wait for the price action to come up here, hit the peak, and retrace down to here, and then this would be the area where you would consider getting in. And if you remember that typical range, I'll zoom in a little bit here. So if this plays out as we were anticipating, this is just, you know, hypothetical. You know, we're going to have this go from here to here, and then it's going to retrace 0.618. So anywhere between the 0.5 and the 0.65 would be where you would dollar cost average in. So let's get rid of this again. Let's just mark this up. DCA area for wave 4. So again, you missed the boat here. You should have been, you know, getting into a trade down in this area. So it's already in motion here. So now you just want to wait for the breakout. That's the best way to go about this. Wait for the breakout. Wait for the little mini retrace. Wait for it to double check the previous peak. This area over here. You know, well, basically you're validating that this area has now become support area. So once that becomes a support area, then you could feel a little bit more confident in getting into a new trade, and then you have a price target, you know, if you're going to exit somewhere up in here, right? And then you would wait for the retrace, and then you would come back in down in this area. Oh, I shouldn't have done that. You're going to come back in somewhere between 1.29 and 1.5, somewhere in that area. So this would be my strategy on this trade. Again, I'm a long-term holder on here, so You know, I got in back here. I've been riding it up. I'm probably up like 200, 300%, if not more. Actually, more than that, since I got in. But again, the current situation of price action, wait for this breakout, wait for the check. Once you have that check, you should be looking to get into a trade here. And then from there, what you should be doing, once you get in that trade, you should be setting your stop loss somewhere below this support level. So you're in a trade here, you got your stop loss here, now you're waiting for price action to go higher. As it's going higher, you got this checkbox. Now, we expect it to retrace. So, you know, you should be considering getting out of your trade here if you believe that it's gonna follow Elliott wave. Now, it doesn't mean it can't go higher. This is just a one-to-one. AB is equal to CD, basically. You know, this run should equal to this run. And then from here, we're going to look for a healthy retracement. So, you know, you should be getting out of your trades along the way here. And depending on what you're doing, if this is a trade, then you should be getting out. If it's a long-term hold, then just keep it there. And then when it comes back down further, back down here again, you know, it might not come down here. If this is a strong run, it may only retrace to 38. You know, this is just basic Elliott wave theory. Like if the short one, the first one's shallow, typical, the big one's usually, the next one's usually a little bit more deeper. So this is just a hypothesis or whatever you want to call it, on how price action can play out. We don't really know what's actually going to happen here. We're just guessing right now, and we're kind of putting something on paper here to see if it follows what we think it might do. For all we know, it might blow past there and go way past more than a one-to-one move. If you remember, Fibonacci extensions tell you that see, this is how we come up with the one-to-one right there. So this is where we think it could be, but could very easily, this could really very easily go all the way up to here, which is a 1618. You know, so now number 4 could really be all the way up here, right? Well, we just got to see what's going to happen here first before we make a decision on where this actually gets placed. You know, so in terms of price targets, you know, you got to decide what you're going to do. Right now, we're just going to leave this here because it has to at least meet the one-to-one requirement for Elliott wave. Once we see the next pivot where it actually stops and takes a pause, then we could move this up. We can move this up and figure out where the 618 retracement of the next run is. So, for example, if price action actually took this up to 618, then we would put this up here, right? And then from there, we would have to figure out we get rid of this Fibonacci. Now we place a new Fibonacci here, from here to here. And now you can see it's not going to come all the way down to here. It's only going to come down to here. Right? So, you know, if you believe it's going to hit 618, then this is where you would be selling your whatever you're holding left. So maybe the idea here would be to sell some here and then sell some more as it's approaching this higher level, and then wait for it to come back down to here for the next trade. And again, depending on if alt season's happening, it may only come back down. It may come back down to this level and just check this level and continue higher. It doesn't have to come down to 618. This is just me putting Fibonacci, Elliott wave, typical theory of Elliott wave on the charts, because no price action is here yet. So we could see a retracement down all the way down to here, but we might see it only here. So depending on the markets and how things are playing out, in this scenario, you might want to consider buying in somewhere over here. Right? So again, this chart, we don't know what's happening here yet, so we have to wait. But for sure, play the breakout. This should be, the 1-to-1 ratio of this move compared to this move should be your first target to be safe. I'm going to just move everything back to the way we had it. All right. So this is what I would do. This is my analysis of how I would play this out for now. Consider strongly to get out of a trade when it hits the 1-to-1 ratio. Now this is all price discovery, right? If we go back to the big picture here, yeah. So we're in the area once it breaks that pivot that I said to look at. You're basically in price discovery mode. So we, none of us really know what's going to happen here. We'll hold off on this bigger picture Elliott wave because, right now we're looking, we have the first one done, we have the correction, now we're looking to get this one done. And from there, then we could start putting in the bigger picture Elliott wave. So with this, let's just double check one thing here, and then we're going to call it quits on this chart. Let's do a Fibonacci extension from here, which is the beginning. Let's put this on. You want to go all the way up to here and back to here. All right, so for 5, we're pretty close to it. Now 5 can end up anywhere between the 1.414 and the 168. So, again, this would be the next range of sales after it breaks through here. So based on this, you're gonna go, 1, 2, 3, 4, 5, and then from there, again, we're getting ahead of ourselves here, but I just want to make sure you guys are kind of seeing when things play out, how it plays out. From there, we're going to go into another ABC. So you're going to have something come down here, then you're going to go a little higher, and then we're going to come lower. So this is going to be the start of another new Elliott wave after that happens. So then we're going to start having a 1, 2, 3, 4, 5 up here. So this is I haven't measured these retracements, but from for example, if you really wanted to see that, you would let me get rid of the old. Let's get rid of this. Now, if you wanted to kind of see where the ABC could end up, you would take from the peak, assuming that's the peak. You'd want the C to be, if it's a strong market, the C is going to end up down in the 318, right? And this could be either a double top, we don't really know where this B is going to end up. So at a minimum, it probably will end up being a double top. Usually it spikes a little higher and then comes down like this. So this is a typical. If you come back here, it actually didn't happen that way, I don't think. Let's see how wave B was a little lower than 5. So sometimes it goes on a zigzag down. So I guess to be conservative, we could just kind of do the same thing here. Something like that. So then the next starting point for the next Elliott wave is going to be down here. And then you got to just, decide if this is going to be a deep retracement or a shallow retracement. And realistically, it's probably going to come down and check hopefully it's going to check the previous high here of the previous 5. And let's see what that turns out to be. Let's see if that turns out to be a shallow or kind of deep. All right, so it's looking like a little shallow. So let's go with the shallow. Let's keep that there. And then again, same kind of thing. You 4 can't go any below. 4 shouldn't go below 1. I don't know why I'm having a hard time with this. All right. So we got 1, 2, 3, 4, and now we got to figure out where 5 would go. And again, you would do the same thing. You would use the Fibonacci extension. You would go from C all the way up to 3, down to 4, and then you take that, and now your 5. Well, first of all, I don't think I did the 1-to-1. Let's just double check this real quick. I don't think I did this. So first thing we gotta do is we gotta set this correctly. So 3 could go all the way up to here. And then, you know, for sure it can't go below 1. So now if we take this extension and we go here, come back down to 4, again, if we assume that it's going to go in between these two, this would be the target. Now, the only thing we don't know here is we don't know time horizon, right? I mean, we could throw all this on the charts and I'm doing all this, but we don't know when this is really going to happen. I mean, right here, just by the way I drew this, you know, we're pushing into the end of the year. Yeah. So we're pushing into the end of the year. We won't know until we really get a better idea of how fast things happen. You know, so time, you can't determine how fast this is going to happen, basically. But this is the roadmap up to, you know, a $7.50 Decentraland. You know, we're only at $1, right? We're only at $1.12. So with this laid out like this, you could see from the current levels, this could be like a 7.5 or 7x from where we are now. You know, it's just we don't know when this is going to play out, right? I mean, from the beginning of 21 to today, which is 3 months, you know, it's gone up a couple things. So we don't know if this is going to happen in 2021 or not. But this is the roadmap in terms of Elliot wave theory. You know, rallies, corrections, rallies, corrections, rallies, corrections, rallies, corrections, rally. You know, anything that goes up must come down, and we got to take baby steps. So I'll leave this here for the broader picture roadmap, and we'll see how things play out over the year. But again, we got to come back to the immediate future, and I'm going to try to get this video out before the breakout actually happens. But this is the immediate area of interest, right? This is just kind of us thinking big picture where it can go. But right now we got to worry about it going to $1.80, not $7.50. So it's not going to go up to $7.50 overnight. Well, I say that, and then next thing you know, it's going to prove me wrong and show that it did do that. But again, this is where we are. Wait for the breakout, wait for the check, do proper risk management, consider getting out, because, you know, anything that goes up must come down. So if this is really a trade that you're doing and not a long-term hold, then you should consider strongly selling, you know, to position yourself for the retrace to get in again. Now, if this is a longer term hold for you, these are prime times. Like for an example, you should just be buying now. You know, don't even worry about price coming back down, because it's going to go up. So wait for it to go up, wait for it to retrace. When it comes back down to this level again, buy some more. And then, you know, at that point, the rocket ship's going to take off. There's gonna be ups and downs in between here. I drew this as a straight line, but, you know, realistically, you're gonna see price action go up, down, up, down, up, down, and get up to here. That's not gonna go straight lined. So there's gonna be other opportunities. Every dip that you see here, every retracement could be an opportunity for you to dollar cost average. But if you're truly in for the long term, then, you know, why buy up here? just be consistent. Buy it every week, buy it every bi-weekly, every month, however you're going to do it. Just buy it, consistently. Don't worry about these. Don't try to time the market if it's a long-term hold. If it's a trading account, that's a different story. You wait for the retracements and, you take advantage of those retracements to get in and out in between all these paths that I showed you here. So, okay, enough about Decentraland. But it was a good request. Actually, I had not looked at it in a while, because I'm kind of just a long-term holder for this one. So I haven't really watched where it can go. But, this is the possibilities. No one really knows for sure, but possibilities are pretty good for this to go up to 7.5 based on Elliot wave theory. But we'll see how it holds out. Just because I put this on the chart here doesn't mean that it's actually going to do exactly what I said. So we'll have to continually tweak this information based on price action that we see. And then from there, we can readjust these targets and see where we are along the way. Okay? All right. So sorry for a half-hour discussion on Decentraland, but someone wanted that and we hadn't looked at it, so it took some time to go over this, and it's good if you're looking at this for the first time, you kind of got a broad picture of where things can go. All right, next one, UniSwap. All right, so we we looked at it a while ago, and it's been kind of crazy here on a daily chart here. You can see this pattern was over here. So basically, all this stuff I've done is gone. It's the over with. We're too far away from what we did earlier, so let's just get rid of all this and clean up the charts and see where we are today. That's really what you got to do. Once we didn't come back often enough to keep this chart more up to date to what's going on, so we just got to reset, refresh. We're looking at this at a broad level here at the 1-day chart. Right now it looks like we could be in downward sloping type wedge. I mean, we could draw some type of triangle formation happening here. It's a little tough. Sometimes you got to go down to a lower time frame to really see what's going on. I mean, kind of see somewhat of a trend line here. You got a lot of wicks here, a lot of resistance on this high side, but it has retraced a good amount from the high, so the only thing I really see here is an ascending type triangle. If you pick off this line here, got kind of, this is a bullish pattern if this is what's playing out here. Got the higher lows. It's not dipping as much. It's hitting as resistance. Right now we're almost approaching that resistance again. So what I would do, I mean, because you got a lot of traffic here. I don't see anything obvious in the charts right now. At the 1 hour. Let me just do something right here because it's getting kind of annoying. this session break stuff. I'm really not seeing much going on here in terms of patterns or anything. The only thing you can really do at this point is play the breakouts, of the support and resistance lines. There's no obvious pattern here, so we don't want to force that. So just to get down to the basics, what you would do is you would just find support and resistance lines. This seems to be a support and resistance right here. And then of course you got the all-time high up here, and the range of, you got the resistance up there. Yeah. You got that range. And like I drew over here, you got this range. And you got, it doesn't look like much, but you do have a couple bucks from 28 to 34. If it breaks above here and checks, if it breaks this and then comes back and checks, you got a little mini trade here. And then the same thing here. If it comes up, breaks, and goes up, then now you're in price discovery mode. That's really all I see for this one. It's consolidating here. It kind of came down. Now it's hitting this upper ceiling here from previous. So if it breaks above here, you got a little mini trade here, but it's not a high percentage gain here. I guess I'm wrong. I guess the numbers are kind of deceiving. That is a good 14%. So depending on leverage, you can have a decent trade here if you see this breakout and check. You can get out and then wait for this breakout and check, and then at this point it's there's no history, right? There's nothing back here from what I remember. Yeah. Look at this crazy chart. Zoom, and then so there's not a lot of history on this one to look at, but that's all I really see in terms of a trade right now, is just play simple support and resistance lines, no patterns. Consolidation range, came back down. Now it's going to be a little harder to get back in here because this has become a lot of resistance now at this level. And once it hits this wall, then you see all these wicks. That's resistance again. So you got this little mini range in here for a mini trade. And then, so like I would say, is like play this breakout, get out here. If you want to keep some on the table, keep some on the table in case it breaks through here and checks and continues going higher. But, it's been rejected. I mean, the more it tests the level, the higher chance that it's going to break. You could watch the overall altcoin market to see how to approach this. If all the other ones are rallying, chances are momentum's going to drive this through. So you got to kind of play it by ear. But certainly there's a little mini trade right here for 14% or so if it breaks through. All right. That's it for UNI. Same thing with Litecoin. We haven't looked at it in a while. It's way past what we looked at before. So let's just clean this up. Let's get rid of all this stuff. All right. Well, at this high level, it looks like a nice triangle pattern showing up here. And this is where we are on a daily. This would be a nice trade if it breaks out, either to the upside or downside. Here are the targets. Again, these are just arbitrary thickness. I mean, you see the resistance there. You could broaden it down to there, somewhere between there for the first one. This one is just, just a guess, because this is oh, actually there might be some previous. Yeah, we do have previous. Let's see. Yeah, so that's pretty close to this peak here. This one's kind of double topped right there. So yeah, these are two decent ranges. Depending on when this breaks out, you got 217 to 256, which is like 40 something dollars. Same thing with the downside. You got the previous B. You got this level, which looks pretty substantial. Let's see. This one seems pretty substantial. Maybe down here. And then of course the target price. Which, yeah. Again, these are ranges. This isn't a straight line. This isn't exact numbers. This is the area of resistance that you'll see on the downside. Same thing here. I drew it as a box, as opposed to a line. It's a range. It's from the wicks to the peak. Somewhere in this range, you're going to see resistance. So somewhere in here is where you should be considering selling. Somewhere in here is where you should be considering selling during the breakout. So right now we're in a pattern here that we don't know what's going to, we got to wait for the breakout. We could drive down a little lower to see if there's anything at a lower level forming. Yeah. It's hitting a little area of previous resistance here. So, I mean, it's inside a pattern. I don't see anything on a lower time frame that would suggest take a trade, but really what I would do is I would wait for the bigger pattern breakout on the daily and take the trade there if it was me. I wouldn't be getting involved in it right here. Yeah, I don't. Again, it all depends what you're doing. If you're dollar cost averaging for longer term, just buy every week. But if you're waiting for a trade, there's so many other trades that could be happening right now. There's no reason to get involved with this one until the breakout actually happens. So we got some time here. If the only other thing I would say maybe we could do here is throw a pitchfork on this bigger pivot. Really, that's just going to kind of give you an idea of when price action could break out. So, with this being said, if it's going to follow this pitchfork, then the breakout's going to happen up there somewhere. if it's going to follow the other pitchfork down. Now you're looking at something like this. And it's kind of hard to get resolution. We don't really worry about resolution right now. Just kind of rough order. So if it's going to follow the downward one, then the breakout can happen almost perfectly. It's kind of symmetrical, actually. So this is where the breakout down can happen. This is where the breakout up could happen if it's going to follow these pitchforks that I have drawn here. And nothing's saying that it has to follow these pitchforks. It's just we don't have anything, so we put something on the chart to see if our thoughts are going to be held, and it could prove us wrong very easily, like it always does. But it's just a roadmap that we're throwing on here to see how it might play out. You want to try and at least try to find a touch point when you're laying these out. Same thing for the upward going one. The better you are at picking the actual points of rejection on these, it's really going to help you increase your probability in really knowing when to get into a trade by having these really aligned nice. Okay, so now we take a step back, scale back out. Again, this is where kind of the point of no return. So price action has to decide if it's going to stay within this pitchfork going downward. If so, it's going to be a breakdown. Up here, this is a point of no return. Now, it doesn't mean that it has to wait until this long to break out, but these are kind of like big picture summary of what's going on here with this pattern. Let me see if I can get this pattern to match these pivots. Yeah, so that's nice. Same thing here. That's really what we want to do. Alright, so now from there this changes a little bit. I'm sorry guys. When you really start going into the details and you're getting these all lined up correctly, then you start getting a better picture of when the breakouts are happening. So again, just like I just mentioned, this pivot, this pitchfork down, this is like the point of no return. This is when breakout has to happen if it's going to follow this pitchfork. The pitchfork up, if the breakout's going to happen, it has to happen at the latest here to follow that. If not, maybe these pitchforks aren't going to be kept anymore. That doesn't mean price action has to stay in these pitchforks. But this is all we have right now, and we're waiting for the breakout. So you could put alerts over here and over here, you know, to come back to the charts, or even here. There's going to be a decision, like I mentioned in the other charts the other day. You know, price action is going to have to make a decision over here of which way it's going to go. Is it going to follow up or follow down? And when you think about that, that's the 31st of March, which is what, 2 days from now? Yeah, 2 days from now. So Wednesday would be something to come back to take a look at to see what the price action did at this crossroads. You know, it's got to make a decision. Is it going to go upward, or is it going to go downward, or maybe it just goes sideways and these pitchforks are not in play. So that would be the next thing to look for me, unless it breaks out earlier. So just set a trend line here for the breakout, take the trade up or take the trade down based on it breaking out and checking. If it goes up, if it breaks out here, make sure you wait for it to check and then go. If it breaks down, make sure you wait for it to check and then go. And then set your proper stop losses right below the trend line. And as it moves higher, move it up to break even. Alright, so that's it for Litecoin. StormX. Alright, this is the other one that the member of our channel wanted me to talk about. Now this one's a little, it seems kind of cool. I looked at it, I didn't know nothing about it. It's basically some kind of cashback app, crypto. Every time you buy something from stores that are within the network of the token, you get money back, you get tokens back for spending money at these places. So it's kind of cool. It's kind of like a reward system. But that's the limit to what I know about this. On the daily, you could just very obviously see that it's been in a range between here somewhere around there to down here. So at the daily, there's nothing but to play the breakout. If it goes up, it goes above here or it goes below here. That's the obvious trades, right? It breaks out, checks, and then goes. Breaks down, checks, and then goes. Right, that's the obvious at the daily level. When you go down lower, let's see what we see. You could see, just check the fib level here. All right, so it's been nicely supported by the 6.5 and the 6.18, which is also lining up exactly with this resistance level. So that's nice. You can kind of see maybe a triangle kind of in play here. Again, unfortunately, these trend lines are, everyone draws them differently. I try to cut as many wicks as possible, but just like the sideways resistance lines, there's a range. Like, it's not a single line here. So, cross more, and you have a chance for a fake out. Where you cross less, and you get a higher probability breakout. Like, you're not touching as many, but if it does break out, it's gonna break out, for sure. Like right here, you only got a couple touch points, and all these other ones are internal. But you could be pretty confident that if it actually does break through these last couple here, that it is gonna move higher. As opposed to if you play it like this, price action could break out, go as high as here, and then still come back in because it's still within that upper. Here, let me do this. You see how, like, if we did that, this range in here, this range right here is really the equivalent of the range that I showed typically in rectangles. So it doesn't mean that it has to break out of this. This is the entire range where it could come back in and wick back in and stay. Same thing goes down here. You got this. You got this level, and then, if you really wanted to, you could pull it out a little further. And you got another little range like this down here. It's hard to, I can't draw. But you got the point. I'm not going to try and draw the same thing, but you got the same thing happening in here. So it'd really be, I don't know enough about this. I haven't been following this coin enough. But to be safe, what I personally probably would do is wait. All right. I personally would probably wait for it to break out to this outer one and then come back and check before I would trade. That's personally what I would do, because I don't know enough about this and I haven't been watching the price action enough to really know what this is capable of, but if it really passes this last line up here, which is like, you know, again, there's a range here. If it passes there, comes back and checks and goes, then it could be, this could be a good point to enter a trade. And again, put your stop loss, you know, somewhere. I mean, to be totally safe, you'd have to put it down here below this lower one, but you can consider putting it somewhere in there as well, and just hope that it doesn't wick down into this range. So that's what I see. I see like a little, you know, a triangle formation here. If you want to use this, you could do, you know, you can use this tool to draw as well. Yeah. Alright, so that's what I see with Storm. I'll just wait for the breakout, either to the upside or downside in these ranges. Just consider these ranges because there's a lot of wicks happening here. You know, so it's dangerous to take the trade too early. It's a higher probability trade if you get the trade up in here out of these other wicks. If it really breaks through this upper trend line here, you know, up here, if it really breaks there, then that's where I would consider taking a trade. But you see what I just did there. I did the trend line, just get the idea together, and then you could go and you could throw the triangle pattern on once you have your ideas down. So let's just leave this like this. Let's see if it breaks out to this upper area here. You know, these are the maximum. This is the safest bet if it passes the A to C trend line. You know, so now I could delete these lines here. So just keep this in mind, just like the levels that I say with the target. So let's figure out the targets real quick. If this does break out, you take it from A to B. Throw that on there. Same thing for the downside. I'm going to clean this up. I went through the idea of what I did there. Now let's just make it so that we could see if it plays out the way we think. Alright, so price targets. Certainly I would set one somewhere in the range of this previous A peak. That's this thing. Somewhere there. Then the all-time high peak. And then finally the pattern target. So those are three, you know, consider DCAing out, you know, get into your trade as the breakout happens. Take some profits here, take some profits here, take some profits there. Same kind of thought process on the downside. You got your B here. Seems to be some type of resistance level around there. And then you got some more stuff happening here. And what happened there? Then you got your pattern target. So 3 on the upside, 3 on the downside. Wait for the breakout. See what happens. Don't take the trade before that. All right, we'll come back to this in a couple days and see what happened here, but practice this on your charts. And we got some stuff set up here. We could see how things play out for us. So again, practice, practice, practice. Take what I did here, rewind, look at the timestamps. You can go back to the different coins and try to replicate what I did and see if you see something different. So really that's it. So yeah, wait for the breakout. Wait for the breakout. Wait for the confirmation. This is important. This is going to give you higher probability trades, lower risk. It's going to give you a little bit of an edge. Don't get greedy. Make sure your DCA, dollar cost average out. Don't try to go for the home run. Take your profits and run with it. Take a step back and get ready for the next trade. There's always another trade. There's so many charts here. I think I have like 16 different charts that I continuously show you patterns and setups that you could wait for the breakout. So don't feel like you have to be in a trade all the time. Don't chase a trade. If it's not right, move on. There's another trade waiting for you. It's important. All right, so finally, just consider subscribing to my channel, clicking the little bell so you can get alerted when we hit the 2,000 subscriber mark. There'll be a giveaway. And that's it. So have a good day, and hopefully this will help you with your skill set of technical analysis and thought process, and work on your mindset. It's very important to be a successful trader. All right, guys, take care.